Yo, what up everyone? In this video, I want to talk about a scalping strategy and how to know if you are trend trading or if you're scalping. It's very, very important to know the type of trade you're looking to put on before you physically click the buy button. And by doing this, you could easily extract more profits out of the market than you intended to begin with. I'm going to show you some examples of some trades that I took, the technicals backing it, and the psychological factors that help us get more profits out of the market. Now, this video I was thinking about adding to the Ameritrade course. However, I'm confident that a lot of you learned something from it. And if you do gain any value from this video, I would really appreciate it if you could just leave a thumbs up on it. And for those who do not follow me on Instagram, I'm going to link it in the description below. I recommend following me at Ameritrade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link in the description below. You're missing out if you're not following it. But now let's get right into this video. Before we put any trade on, we know something's going to happen if we are wrong. Our known outcome is our risk. We are limiting ourselves because we do not want to lose more money than we actually anticipated to lose if our analysis is proven wrong. So before we put a trade on, this outcome is known. It's something we have concrete, and you cannot enter a trade if you don't know where your analysis is going to be proven wrong. For example, in this Amazon trade, let's just hypothetically speak and say we got long once it broke out of this demand zone. For this example, my stop loss would be low a day. So my outcome, if this analysis is wrong, is low a day. That's my max risk. I'm limiting myself. Now, what's unknown is our potential max reward. We have an unlimited potential after we take some profits off the table. The market could keep going up. We could rally. Let's just say we bought at $1. In 3-4 hours, they can maybe go to $40 and we can make an insane profit. This is the way you want to structure your trades. You want to have a known outcome where you're going to exit if you are wrong, where you're going to exit if you are partially right, but you want to leave a max reward, something that you have unlimited potential, so you could always extract more profits out of the market after you protect yourself and after you start playing with house money. Now, I will say, no one is ever always going to buy at the lows and sell at the highs. If you do, you get very lucky, but it's almost impossible to buy at the lowest point and sell at the highest point. All my trades, I'm not buying at the low and I'm not selling at the tippy top price. I'm getting a portion of that move inside and I'm trying to extract as much profits out of the market as I can. With that mentality, you are not going to get frustrated at yourself if you sell. Let's just say you sell at this point right here and you see 20 minutes later the market starts moving back up. If you accept this and you have this mentality, you are easily going to be able to have trades that have more breathing room, and more breathing room equals more profits. Now, I also want to say the market cannot go straight up or down forever. You're always going to have roadblocks, but there could always be continuation after the fact. Meaning, let's just say we got long. We're long right here at 33.19 on Amazon. I'll show you the contracts after. Let's just say we sold some position at 33.71 at the opening price, right at high a day. Obviously, this is going to be some sort of resistance. The market can't just keep going straight up and realistically hit 4,000, let's just call it today, when we're trading at 3,300. There's going to be roadblocks. The people that got long on the way up are going to have to take some profit. If they take profit and they start selling, the market obviously is going to move back down. Now, the question is, does this get met with new buying, or do we have new sellers being present in the market? And that's to be determined, and that's going to be what's going to happen in the next sequence of events in the market. Now, this is our roadblock, but to extract more profits out of the market, let's just say we sold up here, we can now sell up here if you follow what I'm going to say right now. So to combat this, you guys could write this down if you want. Every single trade I look to enter, especially in these market conditions, I have a scalping mentality. Every single trade I enter, I have a scalping mentality because a scalp could turn into a trend trade, but a trend trade cannot turn into a scalp. And if it does, most likely we mismanage the position. What I mean by this is a scalp, a quick move where I'm looking to get a quick entry, a quick exit if I'm wrong, quick exit if I'm right, can easily turn into a small profit or even a large profit. It could turn into a much larger profit if we manage the trade properly. However, if we go into a trade with a trend trading mentality, sometimes that could backfire, and I've seen it not work out as much times as having a scalping mentality will do. Now, what I mean by this, looking at the chart, this is the NASDAQ futures. I trade the QQQ options off of this chart. Now, let's just say we were looking to trend trade a position playing puts off of this supply zone. Obviously, supply means a sell order imbalance. We look to take a bearish position at the supply zone. And let's just say we had a final target of this demand zone down here at 15731, which was actually in the pre-market plan that I posted in the Discord. So now we're short QQQ puts after we hit supply, and I actually pulled these up today. At the point we hit supply was, let's just call it, be conservative, $2.30 on the QQQ 387 puts. Let's just say we traded 10 contracts or one contract. It cost us $200. Now, at the point the QQQ came into demand, the contracts went from $2.30 to $3.47. That is a, what percent gain? That's almost it's a little over 50% gain in a 20-minute period. I don't know who wouldn't want to take that, right? But keep in mind, going into this trade, I had a trend trading mentality, and I wanted to take profits at the further demand zone down there. Now, with this mentality, most likely, if I seen this move off of demand when it looked like this, I probably would have got scared out of my position if I am trading off of emotions. And the contracts that I got in are at 230 and could have sold at 350 for a 50% gain, $120 profit on a $240 investment. Very good return in a stress-free, very quick period. Now with this quick little move to the upside off of demand, now my contracts, I'm red on them after this quick little move up because we're trading options, lack of volatility, and 1 day to expiration. So now I'm slightly red or maybe not red depending on my entry, and I start freaking out. Now, because I had a trend trading mentality, I'm going to think that this market is going to start reversing, and I'm going to sell for a loss once we start moving up. Let's just call it this candle right here where we had max pain. Now, not only is this a bad thing because we didn't follow our stop loss, let's just say our stop loss was above the supply zone, but we also traded with emotions because we stopped out of a position because we thought the market was going to bounce after we never even saw strong buying off of this demand zone. Same scenario, but now let's put ourselves in the position of a scalping mentality like I've been explaining. And this is how I go in every single trade I look to take. Now, let's just say we took QQQ puts at supply. Same thing. We got in at $2.30. But let's just say we took 10 contracts and it cost us $2,300. We have a small account, let's just say. So now we're in 10 contracts at supply. We start moving off into demand. And now we come into this demand zone. I take, let's just say, half of my position off the table. I'm out 5 contracts at $3.50 just to round it off. And I made a quick $1.20 on 5 contracts, which is a quick $600 in a stress-free 20-minute period. Now, I'm still in 5 contracts with this scalping mentality, how to extract more profits out of the market. And the whole point of this video is now that I've lightened the load I've scaled out some of my position, now I'm playing with house money. Meaning my stop loss, let's just say, was above the supply zone. Now it's maybe above the high of where I entered. Or maybe it's right at my break-even point on the remaining 5 contracts. Or maybe it's even, above this high right here. Or above VWAP, right? This is where you could get creative. This is where I want you all to understand that what's unknown is our max reward. The market could keep selling off, and we could have an unlimited potential after we take some profits off of the table. So I'm still in this trade now. The market starts moving back down. Now, since this rally off of demand failed, we had very weak buying at a demand zone, especially after it rallied the first time. The second high came lower than the previous. Failed rally, weak buying. Now we're still in this position. Our stop loss is at this oval right here. We're still only in half our position. We're playing with house money at this point. Now we get a slice through demand. And if you looked at the pre-market plan today, I said, if we find no buyers similar to yesterday at this 158.65 demand zone, I'm going to be looking for an area to play puts targeting a very key area of demand around 157.31. So we're in this trade. Now, these rallies are not scaring us. These rallies are not scaring us. We could follow our plan all the way into the demand zone because our entry is so much higher. We lightened our load. We took some profits off the table. And as the market moves in our favor, it never came near our stop loss. It never could have scared us. We had less emotions because we lightened up our size. And now we could follow, get our max potential, maybe take even more profits down here, or get out your full position if you followed the plan. And now, instead of selling and freaking out earlier at $3.50, your full position, now when we hit demand, these are at $4.80. And from our entry at 230 to the high at 470, that's a 105% return after it being stress-free. So you want to be able to play with house money. You want the trades to be as stress-free as possible. Now, maybe we scaled out another position here, and as soon as it started moving back up, maybe we stopped out the rest on this move after already selling some here. So this is how you can combat extracting more profits out of the market, making it as less risk on your shoulders as possible, and just taking as much profit out of the market. Now, let's just say this is a trade that I took yesterday, the day I'm recording this video, actually. I took the market short when we broke or sliced through demand in this area right here, stop above this high. Very tight risk, very nice reward to the downside. So what I did was I took some profits off the table when we started moving lower, and I had only 50% of my position, so I could target if we do come lower into this demand zone. So get creative with it. There's unlimited ways to make money. You just want to respect your risk, and this is a way to combat that feeling of, oh, I want to buy at the lowest point and sell at the highest point. This is how you make the most money out of your trading, especially when you make it stress and risk-free. Going back to that Amazon example, a member actually took this trade and listened to my advice that I told him the night prior, and he extracted so much more profit off of the table. So he got long once we had this inverse head and shoulders pattern at demand. He got long once we started moving out of it around 115, 120. Now at that point, the Amazon contracts were about, let's just call it $5, let's just call it for simplicity purposes. And he traded 2 contracts. It costed him $1,000 at this point. Obviously, we had the help of Fed, money printer Jerome Powell. Shout out to him. And the market started moving back up. And obviously, we had the 2 o'clock announcement and the market started rallying. His plan was to sell once we came into the 33.60 area to the opening price, around this area, just like this, depending on how we reacted at this area. And we obviously had supply above at 3424. Now, depending on what the market did, he saw it come up, and the option premiums absolutely got spiked up. They were inflated, and his contract that he bought at $5 at the time we hit the supply zone was now worth about $12, $13, and from his $1,000 investment, he now had about $2,500, $2,600 for a 150% gain in about an hour time, a little less. Now, what he did here was he sold one of his contracts, followed his plan where he looked to take profit, and because he understood market context and the strength of the market in response to price, in response to volume, and in response to the context, especially with the S&P and the NASDAQ bouncing off of demand, had a very strong rally in validating supply. He used that context and he was very confident. He took some profits off the table, market very far away from his entry, that he held on to this position. Again, there's going to be roadblocks. The market can't keep going up forever. People that got long are going to start taking profit. We start consolidating here, create new buying, forming new demand at the open price, forming new demand at that old existing supply, which is a bullish sign, and he held onto these contracts. That pullback did not scare him out because his entry was here. His stop loss now was below this low that we made from that stop hunt prior to FOMC. So he raised his stop loss up. Now he's in this trade, and his contracts that were at $13 from a $5 entry, he sold his remaining position right when we hit supply at $3.15, around $30. So from a $5 entry, he got to sell at $30 when the premiums got inflated just from quick 490 to 500% return just by doing that. So with a scalping mentality, yes, you could argue that if you had a trend trading mentality, this could have worked out for you as well. I can only explain what works out for me the best. This is what works out for me the best. I go into every single trade with a scalping mentality. I turn a scalp into a trend trade depending on the context, depending on price and volume, and what it does in relationship to my analysis. So I hope this video helps. If it did, drop a like, comment any questions you have, and if you want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord, no extra cost. I do plan on raising the prices before the year ends, so definitely take advantage of that. But peace out.